Good day traders, Richard Jacobs here and welcome to the Underdog Trade Education channel. It's episode 13 for 2018 and it's been one hell of a day on the markets, to put it in those terms. Daily chart up on the top 40 up on the screen, but I didn't do a recording last night, but you can actually see what's played out in the week to date so far. We had this break of structure, more of a continuation move to the downside, lower close. We closed inside of that 78.6 level that we've been watching, and then the market simply pushed to the downside, and we actually printed, I think I read some reports, we printed our biggest daily down close in something like 14 months. And that certainly opened up the range quite a bit, because that's about 1,400 points on the day. And if you add yesterday's trading activity, that's Monday's trading activity, you probably came from about, let's have a look, market came with highs of 54,600 at the beginning of the week and pushed down to lows of 52,400. That's more than 2,000 points of range in those 2 days. And you can actually see what's happened over here. We've got a massive spike in volatility in the ATR. It's sort of bashed up right through the 50 period moving average. It's one of the biggest jumps in volatility that we've seen in a long time in our markets. And from a continuation trade perspective, it's obviously something that we've been waiting for, something that we could regard as good, because it gives us an opportunity to get on trends. Now, having said that, unfortunately, we didn't manage to get on much today, despite this down move, because the market simply didn't have any, points of retracement that allowed us, in terms of our systems rule, to get involved. So you look at that, and it's a bit disappointing and frustrating that you watch this move push to the downside, and you're not able to really get on board with it. But at the same time, it's quite gratifying to see this opening up, and hopefully it's an indication of what the market's going to be doing as we head into February, because really this is what we need. We need these big moves. Doesn't matter which direction, as I iterate over and over again. It's just a matter of having those ranges in play on an intraday basis, so we can look to take advantage of it when our systems rules allow us to get in. But before we get into what's happening on the intraday side, let's talk a bit more about what's happening here on the daily chart. So obviously we've got that club, lower close, and this follow through happening over here. If you were a structured trader on the daily time frame, this would be a great or should have been a great opportunity for you. Remember, one of the things I said was, once we push into that 78.6 zone, we'd be a bit wary about getting short. But certainly yesterday we pushed out of it, and then we've got this lower close, and sort of pushed down today. So certainly today could have been an opportunity to push down, and really one could start eyeballing a move all the way down to these previous swing low over here, which is where you got your next level of structure. Situations like that, it certainly won't be a one-way street, not necessarily, although judging by today's trading action, one does wonder. But it doesn't have to be a one-way street to the downside. So certainly you could start aligning yourself with that continuation move to the downside, and start eyeballing a potential move, albeit in perhaps a more volatile fashion, towards that previous swing low there. So we're continuing to the downside. The bears have the lead. What's also interesting to see is, if you look at where we started the year, around about 52,500 levels, we pretty much tapped in there again, wiping out all of the profits, or all of the gains that the market's made during this year in just 2 days, two trading sessions. Just goes to show you how iffy these markets can be, and how you really need to manage your positions if you want to get involved in these markets. But let's have a look at what happened on the intraday basis, and this is the 15-minute chart of the top 40. And again, I've highlighted the structure in red since our last recording, And I think at our last recording, which was at the beginning of the week, we had that range bound affair happening there when we said, it's very choppy with false breaks to the upside, false breaks to the downside, happening all over the place. And eventually the market pushed the downside, broke out of this consolidation, and it just kept going. Break, little retracement, massive push down today, chopped along into the afternoon session, bit of a retracement, so some consolidation setting in over here, but certainly still looking extremely bearish. It's hit a bit of, if you just zoom left, let's just pull up a, there we go. So we've hit that sort of 52,600, 52,500 levels over there. It's finding a bit of support, but certainly still very bearish, sorry. And on a shorter term time frame, certainly it looks like it could push down, in which case our next level of support would be coming in around about or just over that 52,200 level, which is about 300 points to the downside, still in it. So that's what's happening on the intraday chart of the top 40. And fundamentally what's been the cause? Well, we've pretty much had apart from some of the news flow that's been happening locally, we've pretty much had a bearish day on most international markets. So let's pull those charts up and look at what's been happening around the world. And so let's start off with this 4-hour chart of the S&P, and as you can see, this is the push down that we're currently experiencing. The trend, and this is important to stress, the trend is still to the upside. Look at this. I mean, the market's making higher highs, higher lows. This is one of the deeper retracements than we've seen since, quite a long time on the S&P, but still, it's still a retracement in an uptrend. At the moment, the market has pulled back, and it's sort of testing that 61.8 retracement level. Got to be wary about just going blindly short over here, because as I said, it is an uptrend. We're testing that 61.8 level. The RSI is oversold. If it does find a bit of support here, just by virtue of being oversold and starts putting in some bullish candles, we could see the start of that continuation move to the upside. But just looking at the pure price structure, one would suggest there's a bit further downside over here, maybe into this congestion zone around about, sorry, let's just pull it up, this congestion, why can't I get my tools right? There we go. This little congestion zone round about here, hovering around the 2800 level, that could certainly be a potential kill zone for this leg of the move down, with the market pushing down into that 78.6, finding support over there at previous price structure, and with that RSI being so oversold as well. RSI oversold, again, just an indicator, guys. I think this is an important point. An oversold RSI does not guarantee that the market's going to push to the upside. I've started adding it to our charts because it just gives you a quick indication of what's happening, but certainly it has to be used in conjunction with other factors, and as we prefer, price structure is one of those factors, and candlesticks to gauge what could potentially happen. So that's just one potential scenario that one could be eyeballing to see what happens. So the S&P still as a just to re-emphasize, in an uptrend but in a deepish retracement at the moment. Let's have a look at some of the other international markets that we have a look at. Let's start with in the east, the Hang Seng. This is an interesting one in that we've actually got a break of structure over here, and this is I think this is quite critical, because this is a market I've been highlighting. It's just been moving up in a straight line since pretty much the entire year. It's been moving to the upside, and this is a key break of structure over here, and you'd actually expect a further follow through. Maybe what we do is, once following this break of structure, the RSI being so oversold, we get some kind of a relief rally, kisses this the structure break level over there before continuation move to the downside. But we're certainly shifting our focus to being more bearish, or we effectively saying that this market has broken structure to the downside, and we expect further downside to continue. So that's a bit of that's different to what's happening or what we're seeing on the S&P, which is interesting. If I go over to the DAX, this is one, unfortunately, that we've got on our personal trading challenge, our offshore trading challenge. We've actually got a long position on, and it's not looking great at the moment. That's where we actually entered our long position. Stops are holding at the moment around about those levels, but look what's happening. We're in a massively deep retracement over here. We've got the situation over here where the market's put in this higher high, higher close, is trending upside, but now we've got this complex retracement. So we're still in this last leg of the move to the upside, again similar to the S&P, although this is looking much more vulnerable than the S&P. We're in that last leg of the move to the upside, and we're only retracing at the moment, but this is a very deep retracement. If we apply our Fibonacci to this last leg of the move, we've now pulled into that 78.6 danger zone that we've been highlighting. And should the market break and close below this level here, which comes in at 13,134, certainly that would open the door to further potential downside. So as I said, on the offshore challenge, this is one that's looking a bit vulnerable. It looks like we could potentially stop out of here. So be it if that happens. But certainly from a structure and analysis point of view, this is a market that's getting close to a potential downside break. And then over to the FTSE, which interestingly enough is another position that we have, and this time we've got the right one on. We've got a short position on this one in our offshore trading challenge, which is quite useful because it pretty much offsets what's happening on the DAX. And just to reinforce what we've been highlighting to you guys is this head and shoulders pattern over here, left shoulder, head, right shoulder. And I said if we have a break of that structure, we could certainly look for a push to the downside. You could have entered on the break over there, which happened on Wednesday last week, or you could have waited for this retracement back up into the breakout level. It pushed pretty far, pulled back into the breakout level, and then it just rolled over and continued to the downside over there. It actually tapped in on this projected head and shoulders target level on our offshore in our offshore trading challenge. We actually got short at this 76.82 level, as you can see over here. We put our stops above that swing high right there, and we're pushing down. We've still got a little bit of way to go to get to the target over there, but it's not too far away. And as I said, it's actually acting. I know I'm mixing things up, but speaking about the offshore trading challenge, but it's acting as a bit of a hedge to what's happening on the DAX. But certainly a nice play out of this head and shoulders pattern. And structurally, we are in a downtrend over here. We broke structure to the downside, and we are continuing to the downside in terms of the price trading action over here. So and then let's look at one more market. I think that's the Rand dollar. Let's just update this quickly. So the Rand dollar is interesting, pushing to the downside, strengthening currency. We've had a bit of a retracement playing out over here, and then we had this continuation candle over here with a lower low, lower close, printing between 10 and 2 this afternoon. Since then we've had a bit of a rally over there, but certainly it looks like we could be starting to see this continuation move and further strengthening of the currency. So certainly something to watch, and should that play out as it appears to be at the moment, that's certainly going to point to further potential downside in terms of the top 40. So if we bring it all back to what we're seeing over here, longer term time frame, daily, we're seeing the continuation move to the downside playing out. On the intraday basis, on the shorter term, the 15 minutes, certainly the trend is bearish. You've got the US still in an uptrend, but in a retracement, points to short-term downside, although not convincing yet in terms of the longer term. You've got the DAX, which is also in retracement, deep retracement on the DAX side, so that's looking a bit vulnerable to the downside. FTSE is breaking to the downside, Hang Seng is breaking to the downside. You have to favor further downside at this point. Importantly, If you want to get involved in these markets, what I would suggest you do is a couple of things. One, obviously it depends on the time frame you're trading. Try not to chase. I know it's very tempting when you see these kinds of candles over here, just to jump on board and try and get short. On a short-term basis, we're probably pretty oversold at the moment. So wait for some kind of relief rally, especially if you're trading intraday. Try and get involved for a potential move to the downside. That's the kind of plays that we have in our minds at the moment. But equally, if you're on a very short time frame like the 15 minutes, you could even look to ride some of the any potential relief rally to the upside as well. The important thing is we've got some range in the market at the moment. Long may it last, because it's something that we're going to look to try and take advantage of in either direction as we close out the month and head into the new month. In terms of the trading performance on the 15 minute, as I said, not been able to take advantage of much this week. We had a C day on Monday, what we classified as a C day. Just going back there, sorry. Following Friday's trading performance, obviously it turned out that we had that lower close, which translated into today and also tomorrow. And that's important. Tomorrow being an A day means it's a risk on day. You're looking to try and maximize your trading, try and take advantage of as much trend as possible. But just coming back to that, so there was a 172 pointer potential winner. Unfortunately, it was a C day in terms of classification, so we null traded it on Monday, and pretty flat today, minus 10 points. It doesn't really change much in terms of the equity curve. So pretty flat since our last recording. We're hanging in there in terms of profitability on a weighted basis, which is great, and that's pretty much what we're looking to do. Our win percentage is at 35% for the month. Still not great, still not even at that 2017 average, but our reward to risk remains pretty healthy at 2.94 to 1. So that's what's happening on the top 40, and then I've been touching on what's been happening on the intraday trading challenge. So sorry, intraday, on the offshore trading challenge, I should say. And it's let's go there and have a look at what we've been doing, because we've been very active. You can see we've at the moment we've got 1, 2, 3, 4, 5, 6, 7, 8 open positions, massively so. We took a bit of sting on oil and on pound yen, closing out over there. Let's just have a look at that pound yen one, because that's, I think, worth a look. See, let's just pull that one open. Okay, so look what happened over here. We had this market pushing to the upside, putting in a series of higher highs and higher lows. Then we had this retracement over here, and it pulled all the way back. We got a nice oversold RSI, looked to be turning, putting in a slightly higher close, and then it pretty much just dipped down to the downside. In fact, we broke structure to the downside over here, putting in a lower low, lower close versus that swing low over there. So at the moment we're actually taking off our bullish hats and putting on our bearish hats, and we'd actually look to get short this market should we see enough of a rally back up over here. We lost about, I think, 86 pips. I'm going to start using this designation over here. The one is theoretical loss in terms of our trading rules. The other one is actual. I think we lost 83. Our theoretical was an 86 pip loss. So not fun, but yeah, won't break the bank in terms of our overall money and risk management. So that's on pound yen, translated into £56 loss. And then, as I said, we've got quite a few open positions. So let's run through some of those. Give me 1 second while I prime those charts. Right, so first one up is Euro Japanese yen. This is one we've had open for about a week or so. We're looking for quite a significant move to the downside, and again, we're just going to be patient over here. Market's pushing to the downside slowly, and as I said when we were speaking about the top 40, markets generally don't move. in a linear fashion. So we've been chopping around and putting in a bit of lower lows, and that's where we are at the moment. We're in the money, not significantly so, but certainly seems to be moving along in terms of a continuation move to the downside in the right direction. So again, we continue to give this particular trade its space. The DAX, this is the one we looked at earlier. As I said, tapping on that closeout level at the moment, just holding form. It's going to be interesting to see if it actually manages to hold above that stop level. If it does stop out, so be it. What's actually quite interesting is if it manages to hold the structure level, because even if it does stop out, then we would still look for another potential trade to the upside. The other one I mentioned, which is doing pretty well, is the FTSE. Again, putting in a bit of a rally at the start of this 4-hour candle, but still teasing that target level over there, and hopefully we can just push down and tap out on this particular trade. A couple of the new ones we entered today: Aussie US dollar long trade to the upside. Fairly self-explanatory. Markets pushing to the upside, putting a series of higher highs, higher lows. It retraces back down. We put in a bullish candle, and now we're just looking for that extension and push to the upside over there. What's next? Euro USD. What you'll find is there seems to be a lot of USD pairs in our setups at the moment, and again, markets pushing to the upside, bullish candle. We're looking for that extension to the upside, euro over the USD. So certainly got a bit of a bias embedded in our trades in terms of dollar weakness. There's another one, pound USD. Market retraces, get long, looking for that push to the upside. So all of these little trades are at their inception at the moment, but it's certainly something that we will give the space to perform. Remember what I said in our last recording is we're trying to get involved in trades and really give these trades the opportunity to mature, not prematurely roll stops and things like that. Just give it the space, in a sense, put it in a bit of a binary situation. It either goes up and it hits target, or it stops out. And that risk is covered by a couple of things. One is our money and risk management, the fact that we're not putting excessive amounts of our capital at risk on any individual trade. And two is in terms of our target reward to risk. So even if our outcomes are binary, we've still got decent reward to risk ratios, or target risk to reward ratios in play that will compensate for those times when, with our wins compensating for those times that we lose out. Another one which is sort of biased against the dollar is a short on the USD CAD, and again here we've got the series of lower lows and lower closes, and now we've gotten short and we're looking for that push to the downside in this case. And I think we've got one more position, which is gold. This one's not looking too great at the moment. Here we are. It put in the same structure that we're seeing over and over again: higher highs, higher closes, trending to the upside, retracement back down, and then we've got the continuation move. These continuation moves haven't really come out of the blocks very fast. I must say, you had that candle, that nice 10 o'clock to 2 o'clock candle, putting in big bullish candles on a lot of these charts, and then sort of just market sort of trundled along sideways over here. We're really looking for continuation and a push to the upside on these positions. So that's pretty much where we are at the moment. Going into the end of the month, it's going to be interesting on the trading challenge to see if these positions can convert, or enough of these positions can convert to really just start generating that positive expectancy that we do anticipate from our trading rules and trading systems. But we're going to give them the space to actually play out. So guys, we've got one more trading day left in the month. We've got the benefit of a lot of momentum, a lot of trend in the market, and hopefully we can get some really nice opportunities in terms of getting on board either on the offshore, on both the offshore trading challenge as well as on the top 40 on an intraday basis, which is where we trade in the Underdog trading room. That's it from our side, guys. As always, feel free to drop me any comments if you have those. Feel free to drop me a line, Richard at underdoginvestments.co.za, if you want to chat about anything to do with trading. It's one of the things that I do and love talking about. So feel free to connect with me in that space. Until we chat again, have a good one and be safe in your trading. Cheers.